Hey guys, how are you? So today we are going to discuss about where does your salary go? So have you ever faced a situation where your salary on paper seems fine and seems sufficient, but when it is credited in your bank account, it seems very less. You're like, where does all the money go? So we are going to bisect where exactly does your money go? What are the components that gets deducted from your on paper salary before it reaches your bank account? So imagine this. Your paycheck, which is your on paper money, is like a big box or big tank full of water. But when the water reaches your house through a pipe, there are multiple holes in that pipe. These are not holes that you can, repair or you can cover up. These are mandatory holes. These are government level deductions that have to be deducted from your salary before the amount reaches your bank account. So first is FICA, which is a mandatory social safety net. It is a mandatory amount that is deducted by the US government to provide security to the elderly, which are above 65 years of age. And also basically gives you bonus points so that when you come of age, you will also get benefit from the younger generation's income. Second is the federal tax, which is your countrywide tax that is applied on your income, which also gets deducted from your own paper salary. Third is state or local tax. So this is state wise. Some states have higher tax ceilings, some states do not have any tax rate limits, and some states have lower tax rate limits. And finally, there comes deduction. So now let's discuss about each of the components separately. First, let's understand what is the gross pay. So if you're an hourly worker, you work on an hour basis. So the gross pay will be how many hours you worked and what is your pay per hour. Also, if you work overtime, then the pay is 1.5 times the normal hourly rate. So that's how you will calculate that. So for example, if you work, let's say 40 hours a week and your pay 40 hours a week and your pay is, let's say $20 an hour. So your gross pay would be 800. And let's say you work 10 hours overtime for that week. So in that case, your hourly rate will be 1.5 times of the normal rate, which will come around 30. So then your gross income for the overtime will be 300 and your total income will become 1100. $1,100 would be your gross pay. Now, what about the salaried worker? Salaried worker means who is not paid according to the hours, but according to, let's say, days, week, or bi-monthly or monthly. So uh, for that person, it would be like annual salary divided by number of pay periods. So annual salary is, let's say, 40,000 and number of pay periods is 12 if you're paid monthly. So your gross salary will come at around $3,333 per month. This is how you calculate your gross pay. Gross pay is this bank. What you see on the paper when you sign the offer letter, what you see on the paper, this is your gross pay. Now we will deduct everything from this one. This is the map. This you can study on your own. I'll share this file with you. But let's talk about the FICA, which is Federal Insurance Contributions Act. Now there are two components of this FICA. Component one is which is Social Security cut. So this is cut. This is a deduction of 6.2% from your income, which is to fund current retirees and disabled individuals. So, for example, when you will retire, you will also not be able to earn. So then you will get paid out of the younger generation's income. So basically, you are funding the next generation, and so you are funding this basically the earlier generation, and the next generation will then fund you. And there is a limit of maximum 1,84,500 on this 6.2%. So basically, if your income is up to $1,84,500, then 6.2% will be deducted out of your income. But if your income is anything greater than that, then there will be no extra charges. So what I mean by that is, let's say your income is 1,84,500 and you will be deducted at 6.2%. So it will come at 0.0062. You will be deducted, so 6.2%. You will be deducted $11,439 from your gross pay. But even if your income is, let's say, $200,000, you will not be deducted 6.2% of 200,000. You will still be deducted 11,439. So basically, max capping of this 6.2% is 11,439 only, right? So, and there is now second component of this FICA, which is Medicare, which is around 1.45% of your gross pay, and there is no limit of that. So even if you earn $100,000 or $500,000, 1.45% will be applied. So there is no maximum cap like there is in Social Security cut. It will be deducted as it is, right? So now coming on to the FICA CISO. So FICA is basically, if you see here, total that is deducted from your gross pay is 6.2% plus 1.45%. That comes around to 7.6% in total. Now what happens is 7.65% is deducted from your paycheck. Also, employer also contributes the same amount from his side as well. So basically, what government is getting a total of 15.3% in total. Half is paid by you, half is paid by your employer. But there is a catch in this: the Medicare tax. If you earn anything over 200,000, there is a 0.9% Medicare tax that is also deducted from your paycheck. Now, this 0.9% is not contributed by employer as well. So this burden is only on you. So if you earn $200,000 or more than that, you will be paying 7.65% plus 0.9%, but your employer will be paying only 7.65%. So that is a catch that is there in FICA. Now, what is the tax bracket staircase? So government thinks that person who is earning less should be taxed less because he is already under a burden, under a financial burden, and who is earning a lot more should be taxed more because he can, afford that. So there are multiple slabs of tax, federal tax, right? First chunk of money is taxed at 10%, next is taxed at 12%, next it is at 22, and maximum slab is 37%. So this is how the tax slab goes. Now, differentiating between FICA and federal income tax. We have discussed both. Now we will discuss the differences between that. We just discussed that FICA is a flat 7.65%, whereas federal income tax is a slab rate. It gets higher as the income rises. Income limits: FICA gets capped at 184,500 for Social Security, not for the 1.45% of health deduction, right? Or federal income tax, this is uncapped. All the income will be taxed even at a higher rate. What is the purpose of FICA? It is for Social Security, for the retirees and disabled persons. Federal income tax is for government operations to provide the benefits or services that government provide: roads, military, infrastructure, etc. Now let's talk about the state tax landscape. So as I discussed that federal tax is applied all over the America, but state tax is applied by specificity by states. It can be less depending on the state. It can be no tax depending on the state, and it can be higher. So if you see here, all the green ones are where there is no tax at all, no state tax. So you save a lot of money there. And in the blue ones, there is a flat tax rate. So basically, let's say it is a 10%. So even if you earn 40,000 or you earn $1 million, 10% will be applied on your gross income. And third is wherever it is orange, it is progressive tax slabs. It is like a federal tax, which gets the rate gets increased as your income increases. So which one is better for you? That will depend on you, but and depends on where you live. But this is how the state tax is currently working in America. Right. Then now we come to the last pipeline, the green one, the voluntary deductions. So all the deductions we just covered were the mandatory ones that the government take out of your gross paycheck. But there are certain deductions that you can also make to preserve your future, to make your future less challenging, or to basically financially stabilize yourself against the future uncertainties. So basically, like you can take health insurance premium, you can take life insurance, you can have 401k. If you're not going to get into the details of that, but you can also have multiple voluntary deductions to protect yourself in the future. Now, how the 401ks help you? So the 401k helps you by reducing your federal tax income, reducing your taxable income. So if let's say your gross pay is 5,000 and you deposit $500 in 401k, that $500 is basically exempt from taxes. So now the tax will be applied only on 4,500. So it is a double saving if you see. First, you save $500. Second, you saved a tax on the $500, the tax that you had to pay. So it is a double saving if you save in the 401k. So this is a scheme that has been introduced by government so that you develop a habit of saving also, so that in future you don't have to face that many problems. Now, the hidden paycheck. So this part is what you call as gross paycheck, right? Which out of which federal tax will get deducted, out of which state tax will get deducted, out of which you will contribute to 401k. But there is still a load that is being paid on your behalf that will be benefiting you in the future. So as we discussed, the 7.6% of FICA tax that is deducted from this part, your salary of yours, is also matched by the employer. So basically, this is also going for your benefit in the future, right? Also, a big portion is health premium. company often covers 70% of your total cost of health premiums. So this is also the amount that naturally get unnoticed. And in 2026, a new provision has been created where employers can contribute, not should contribute or not have to contribute, but they can contribute up to 2,500 to a minor's traditional IRA, which will be entirely excluded from your gross income. So you have a direct benefit of this $2,500, but it will never be calculated in your gross pay or for the purpose of calculating your taxes. Right now, the finish line. Finish line is do not budget according to your gross pay. Budget according to your net pay only, because that is the money that you will be receiving, not your gross pay. Gross pay is just a figure on the paper which is not yours. Many parties will take their cut from that figure, and the final amount that reaches your bank account is the final amount on which you should do your budgeting. And make a habit of saving, and always keep 3 to 6 months of emergency fund for whatever needs that might come up in the future. If you do all this, you might be in a very good position financially, and in future you won't have to face as many problems and you will be debt free. Thanks. If you like this video, please subscribe the channel. I'm just new to YouTube, and please comment with how I can improve. I know I have a lot to improve, but please send me the suggestion on how to improve my delivery or how to provide more information to you.